Hello friends, welcome to today's session. In today's session, we'll be learning about the concept of accounting equation. We'll be learning it with sufficient number of examples to understand what is accounting equation and how the transactions of a business have an impact on the accounting equation. Now, first let us understand the meaning of the term accounting equation. Accounting equation is just a mathematical expression, and this expression is based on dual aspect concept. So first you need to understand what is this dual aspect concept. Dual aspect concept is a concept where whatever is the transaction which is entered into by a business, it has two aspects. The two aspects that we're talking about here is debit and the credit. So, whenever a transaction is entered into by a business enterprise, there is going to be a debit and a credit going into different accounts of equal amount. That is what is the concept which dual aspect concept is based on. And this accounting equation that we are preparing is going to be based on this concept, that when we come across a transaction, if we are to enter it into an accounting equation, we have to identify the accounts involved and the effect on those accounts involved. And you have to remember that for every debit that you have given, there will be an equal credit to maybe one account or more than one account, but of equal amount. So the amount which is debited, the same amount there should be a credit as well. That is dual aspect concept for you. Now, let us understand what is the basic accounting equation. The basic accounting equation is assets is equal to capital plus liabilities. Now, you need to know all of these terms to understand this accounting equation. Now, what are assets? Assets are nothing but the resources which are owned by the enterprises, which are going to be used by the business for carrying on activities. Like trading concern requires certain assets, then it can carry on the buying and selling activity and generate revenue. Manufacturing concern require assets in the form of plant and machinery, building, so that it can manufacture goods and sell. So those resources which are owned by business are in short called as assets. Now, we will understand the term capital and liabilities. Whatever the business enterprise owes, that is called as capital or liability. The two types of amounts that are owed are capital, which is owed to the owner of the business. The one who owns the business, he has contributed money, which is called as capital, using which the business is going to be carried on. So the business owes the amount to the owner, that we call it as capital. Whereas the business might owe to outsider as well. So whatever is owed to the outsiders, that is called as liabilities. Outside liabilities. Like when goods are purchased on credit, it means you're not paying immediately, but you're going to pay at a later date, maybe after credit period of say 1 month or 2 months. So the amount is payable by the business to the creditor. If a loan is taken by business from a bank, then that amount, which is the bank loan, is repayable by the business over the loan period, loan term. So those are the examples of liabilities which are owed to the outsiders. So what we are saying by this accounting equation is that whatever is the resource which is owned by the business in the form of asset is equal to the total of the amount which is owed to the owner and the amounts which are owed to the outsiders put together, and it would equate to this. So to understand this accounting equation, how it works better, let us now take practical questions and understand it. Like how the transaction affect the accounting equation. First transaction is where capital introduced by the proprietor, rupees 5 lakh by check. Now first step in preparing accounting equations, identify the accounts involved in the transaction. So here, from the reading of this, we know that this capital introduced. So there is going to be capital account involved. And how it has been introduced? By means of a check. So what do you do with a check? You take it to your bank and deposit it, and your bank balance would increase. So the other account involved here is the bank account. So first step done, we have identified the accounts involved in this transaction. Now what is the effect when capital is introduced by means of check? The amount is coming into the business and capital is going to go up. So capital increases by 5 lakh, and at the same time this check has been deposited into the bank account of the business. So the bank balance also goes up by 5 lakh. So this is the effect of this particular transaction on the accounting equation. Moving on to the next. Purchase of goods on credit rupees 20,000. So when you purchase goods, which are the items which are dealt in by the business, which is going to generate revenue for the business, those item purchases has to go into purchases account. So the first account involved here is the purchases account. And how has this purchase been made? It is being purchased on credit. Means immediately nothing is being paid. Neither cash nor check, nothing. Payment is going to take place at a later date, which means the business would owe that creditor amount which he will have to pay. So that is going to be in the form of a liability, amount owed to the outsider, in the form of creditor. Whatever is the creditor name, that will be the account involved. Now once we have identified the account, what is the effect? Now there is purchase of goods, which is going to, when you think from the point of view of an accounting equation, when you purchase, what happens? Goods come into the business. So goods come in and it is going to increase. Whatever goods you are holding is going to increase. Therefore, the account involved would be your stock account, which would increase. So there would be an addition of 20,000 to the stock account on the asset side of the equation. And on the liability side, amount is owed to the creditor. So liability side, the creditors would increase by 20,000. So this is how stock increases by 20 and your creditors on the liability side increases by 20,000 in the accounting equation. Next transaction is payment to creditor of 20,000. Now maybe after the credit period, you are making the payment to the creditor. So when you are repaying back the amount which is owed to the creditor value has to go down. So the account involved would be the creditor account, which is going to be affected. And how are you making the payment? Nothing specified. Yes, we'll assume that cash is being paid. If they had specified that it was by check, then bank account would have been involved. So the accounts involved in this transaction are creditors and cash account. Now what happens to the creditors here? The creditors were owed 20,000, which is being paid back to them. So creditors would decrease by 20,000 because it is being paid and settled. And at the same time, you're paying by cash. So your cash balance in the business is going to go down. So this transaction has the effect of reducing the liability in the form of creditors, and cash on the asset side would also get reduced by 20,000. So this is the effect on the accounting equation. Now moving further, next transaction is of cash purchases for 5,000. So when there's a cash purchase, what happens again? You are getting goods into the business. So the account involved is the stock account. And at the same time, you are paying by cash. So cash is the account involved here. When you're making purchase, your stock going up by 5,000. So assets increases in the form of stock by 5,000. But you're paying cash. So cash is going to get reduced. So another asset in the form of cash is going down. So through this transaction, you find that one asset has increased, another asset has decreased. So on the accounting equation, asset side is, the effect is nullified by means of this transaction. Now going further, suppose next transaction will take a loan by partner converted into capital. Suppose a loan amount was rupees 1 lakh, which was given by a partner of business to the firm. And now they have decided that that loan of 1 lakh given by partner A is to be converted to as capital. Then under such circumstance, what happens here? One, whatever was the liability, that is the loan by partner account, which was there under liability, that would be affected, that would be closed out, and the other effect would be on the partner's capital account, which would increase. So what happens here? The loan decreases by 1 lakh on the liability side, and it increases on the same side of equation, the capital increases by 1 lakh. So you find that how on the liability side of the accounting equation, one liability decreases and another liability increases. So this way you find that for every debit there is an equal amount credit also. And therefore on this side what happens? The asset side is unaffected, the liability side, the effect is such that it gets nullified in the accounting equation. And your accounting equation still holds good. Now moving further, we'll do some more. Like for example, wages paid rupees 8,000. Wages paid is an expense. So what is involved? Wages account and the cash account which is involved. Now when we talk about wages, it is in the nature of expenses. Now when it is expenses, you need to know that the effect of the expenses net of the revenue. So revenue minus expenses, the profit is normally added to the capital at the end of the year. So now when it is a specific transaction, wages paid and expenses, the effect of this would be on the capital account. So the wages going up, so capital would get reduced by the wages amount of 8,000. At the same time, wages is being paid, so cash is going out, and therefore cash also gets reduced by 8,000. So you find here liability side capital going down by 8,000, on the asset side cash account going down by 8,000, and your equation still holds good. I'm going to one more. Next is outstanding wages, rupees 4,000. Now what is outstanding wages? It is a wages expense of the period but which has not yet been paid. It is still payable. So there is wages involved, which is an expense, and so you know whether paid or not, it being an expense, it would have an effect on the capital account. It would reduce by 4,000. On the other hand, this wages has not been paid, so cash or bank balance is unaffected. It is still payable, so it's a liability. So on the liability side, you're going to have a liability in the nature of outstanding wages account. So this being a liability, it also goes up. So you find that on the equation, liability side of the equation, capital goes down by 4,000 and the liability in the form of outstanding wages goes up by 4,000. So nullifying that effect, your equation still holds good. Now moving further, so far what you saw was that in each of this transaction, either one asset was increasing, one asset was decreasing, one liability was increasing, one liability was decreasing, or one asset was increasing and liability was increasing, and so on. Only two accounts were involved. This is one transaction I want to show you where three accounts are involved in an accounting equation. So there is that possibility as well. Now this transaction is goods costing 25,000 sold for 20,000 for cash. So there is a sale of goods. So when you sell goods, what happens? Goods go out. So your stock balance is going to go down. So the first account involved is a stock. The other one is when you are selling, you are affecting sales. So sales account is involved. And as you've sold, you're getting cash. So cash account is involved. So you see there are three accounts involved here. Now what is the effect of this? Your stock is going to decrease. But how much does it decrease by? You know, whenever you made purchase of goods, you were adding it to the stock at cost. Whatever you paid for it, that is a cost, and that was the amount which was getting added to it. So now when you are taking it out from the stock to sell it, what have you to reduce? You have to reduce the cost. Therefore, you reduce it by 25,000, which is the cost of the goods which has been withdrawn from the stock and being sold. Now, once you're selling it, what happens? You're going to have sales. You're getting how much? 28,000 in cash. So your cash increases by 28,000. But we're not going to directly take the sales amount. We are going to take the difference of 3,000, which is the profit portion of the sales, which we will take it to the capital account. So capital account would increase by 3,000. So you see, on the asset side, you find cash increases by 28, whereas stock decreases by 25. So net effect being of 3,000 increase on the asset side. So if you see here, asset side, capital plus liabilities is the basic accounting equation. On the asset side, you have stock, which is decreasing by 25,000, and you have the cash, which is increasing by 28,000. So net effect is how much? An increase of 3,000. And here you find your capital is involved here, where you have the profit portion, which we are adding it, which is 3,000. Now, do you see how the accounting equation still holds good? So this is how you prepare the accounting equation. So all these transactions, if you put it in the form of a table with on one side the assets with subheads of all the accounts of subheads, ledger accounts of assets, and on the other side you put the capital and the different liabilities, and each transaction you put like this, you will find that with each transaction there will be two effect. Thus you are using the dual aspect concept, and this is how you solve an accounting equation question. I hope the concept of accounting equation is clear to you. I hope with all these examples I have tried to cover as much as possible related to the effect of transaction in a different basis on different sides of the accounting equation. So if you found this video useful, please do like, share and subscribe to the channel. And if you have not yet subscribed, please do subscribe so that you get continued notification of all upcoming videos. And for that, you click on the bell icon so that you get notifications on regular basis. So thank you for joining me today. Have a great day.